Before the opening bell today on Wall Street, investors sifted through a new round of stronger than expected earnings from companies like 3M, Ford, and Southwest Airlines. And they liked what they saw and shrugged off today's economic report. Jobless claims fell by only 12,000 last week. That was less than expected. The Dow rose 95 points, the Nasdaq was up 21, and the S&P added 5 points.
Well, with the market in positive territory and continuing its climb higher, is there ever a good time to start selling some stocks in your portfolio? And is this one of those times? We asked Scott Wren. He's senior equity strategist at Wells Fargo Advisors. Scott, good to have you back. You know, the market has been doing very well this year. I know you think, and many people think, that it's sort of close to fairly valued or fully valued, not way ahead. So I'm not asking that question, but there are certainly a lot of stocks in the market today that have had big run-ups. When do you start taking profits?
Well, Tyler, you're right. Our target for the S&P 500 is 1650 to 1700 for year end. We're trading a little bit higher than that. I don't think we're going to see a lot of follow through from here. And you're right. There's a number of stocks, a lot of stocks that really have seen some valuations run up. And for us, you know, retail investors pay the bills here at Wells Fargo Advisors. And so you mentioned, you know, Dominic mentioned, you know, stocks that don't really make money but have, you know, big market caps and things like that. That's fine for some people. You know, you want to have maybe a few of those in your portfolio. You don't want to have 50% of your portfolio in stocks that don't make money, in my opinion. So I think what we want our clients to do is largely be positioned in S&P 500 type stocks, quality stocks, dividend-paying stocks that you can build wealth in over time. So now, given the fact that we're above what I would consider a fair value valuation, we're not a lot above those. But for some people, particularly those that want to be a little lighter on their feet, it might not be bad to take a little bit of money off the table. I'm looking for more volatility. I think we're going to have some opportunities to buy stocks at lower levels. But really, for most retail investors, think about it. You know, a 5%, 8%, 10% pullback, retail investors can't play that tight of a market. Yeah. That's not enough for them to get in and out.
We talk a lot, Scott, I know, on business television generally and in the personal finance magazines about what to buy and when to buy and buy on this pullback. But I look at a guy like Carl Icahn, who earlier this week sold half his very rich stake in
that worked out pretty well, didn't it?
It worked out pretty well. But what he was doing there was executing on a sell discipline that he had. How important is it for an investor, the moment they buy a stock, to know when they're going to sell it?
Well, ideally, you'd like to have an entry point and an exit point, and that's maybe a little bit more of a trade. But investors have to think to themselves, I have an idea in my mind, whether it's through buying somebody's research or using our analysts here, that what is fair value? If momentum takes it above fair value, you should start looking for ways to peel off a little bit of the money that you have, of the profit you've had. 20% of the stock, 50% of the stock. But if it's a good quality stock that you think has room to run in the long term, you don't want to completely cut out of that stock, because who knows if you ever get back into it.
Which is kind of what Icahn did. He sold half his stake. He said earlier today in an interview, he said, I've made 5 times my money in that stock. And when I do that, I want to start taking some cash off the table. But here he's letting, I guess you would say, his profits run because he still believes in the company.
Nobody's going to fault you, and investors should not feel bad about taking some money off the table. You still have some of that position left. You still benefit if there's more.
You never
upside.
lose when you take a profit, do you, Scott? Now, let me ask you the converse question. At what point do you decide to sell a company that you've bought that is losing? Should you go in and say, okay, the minute this thing goes down 20%, I'm out of here?
Yeah, I think really when you have a gain in a stock, or even when you buy a stock, you should have at least some sort of a mental stop. You have to say, well, if it's more of a trade, you know, I think I can make $10 on this stock. Well, for me, you know, I like a ratio of about 3 to 1. If I think I'm going to make $10 on a stock, I really don't want to lose more than about $3 or $4, something like that. So, you know, investors, They have a big
That's
problem.
helpful.
Retail investors, they hang on to losers way too long. And you have to be in the right stock at the right time, at the right part of the cycle. That's all hard to do. But you need to have mentally in your mind when you're going to get out of their stock.
Tell me
You're
about
not
it.
gonna
I
ride
know
that
it from
thing
my
down
own personal
80%.
experience. You just sit there and you go,
Yeah, we all do.
I know this stock's
We all
coming
do.
back. I love it. Scott, we
Right.
got to leave it
Yeah.
there. Thanks very much for your help tonight. Scott Wren,
All right,
Senior
Tyler, have a
Equity
good evening.
Strategist at Wells Fargo. You too.